Welcome to What to Do with the Family Business. This session is presented by EY and Bassberry and Sims. Let's meet our panel. First, meet Bobby Stover, partner and America's Family Office Leader for EY. Next, meet Chip Conk, CEO of Montecito Medical Real Estate. And welcome to our moderator, Frank Pellegrino, member of Bassberry and Sims. Frank, the virtual floor is yours.
Great. So welcome, everybody. Glad to be here. I'm Bobby Stover, America's Family Office Leader at EY. We're proud to be a sponsor of the event this year. Really excited to have Frank join us and Chip. Chip with Montecito Medical Real Estate in Nashville. And then Frank's one of the leading attorneys in Nashville. And I'm Bobby Stover, and I'm in Dallas, Texas. You're probably wondering why they invited me to this. And so I just brought my Tennessee Titans jersey to let you know that I'm a big Nashville fan. But Chip and Frank, if you just do real quick introductions, and then we'll jump into the panel on family dynamics.
Great.
Chip, you want to go first?
Sure. Chip Conk. I'm a CEO of Montecito Medical, and we're a healthcare real estate company out of Nashville, Tennessee.
Great. And Frank?
Yeah, thanks. My name is Frank Pellegrino. I'm a partner in the corporate group at Bassberry and Sims in Nashville, Tennessee.
Great. And so we're going to have a conversation today, and I've spent some time with Chip. Even in our EY practice, I'm so excited with entrepreneurial families that want to stay family-owned, driving the economy. And Frank, I know when we've talked, you see the same thing in your practice. So our goal today is to hopefully bring some insights around that to the folks that are on the phone. So Chip, first thing, tell us about how the company's owned, really quick, and then we'll get into kind of how you guys transformed and how family dynamics played in that. But if you could just give us a real quick background on that.
Yeah, sure. Montecito Medical, we're a family-owned business. It's myself, my brother, and my sister, and we've been in business since 2005, exclusively buying medical office buildings around the country.
Great. And so, Chip, if we dive in here and we talk about the pandemic, when the last crisis happened back in 2008, you said you were unprepared, and there were market opportunities that you were unprepared to go and get. So that led you on a journey. So tell us a little bit about that with your siblings.
Yeah, sure, Bobby. So in 2007 and 2009, we really basically became paralyzed. We didn't know what to do. We were shell shocked like pretty much everyone else was. So we pretty much stopped acquiring buildings and just started managing our portfolio. So it really caused a 3 to 4 year delay in our growth plans. And in COVID, we had a very different operating model that we executed upon.
Yeah. So Frank, I'm interested. Did you see the same thing of people learning from the 2008 crisis and being ready for opportunities as we headed into COVID and capturing those opportunities, which Chip's going to talk about?
Yeah, I think so. I think obviously it depended on the industry, right? Sometimes if you were in the restaurant business, I think you were struggling. But whereas medical office buildings, I've got a big family owned business in the industrial space. I think they were able to capitalize on those opportunities. Certainly looking to the mistakes or the lost opportunities in 2008, but it's in my experience industry specific.
Yeah. So Chip, you talked about how you were paralyzed because you and your siblings weren't aligned. So could you talk a little bit about the roles that you each had in the company, even though you're equal owners, and what some of that paralysis was back in 2008 and 2009?
Sure. So I'm CEO. Our family's we've been in business 34 years together. So we all have our own separate roles. My sister pretty much keeps the trains running. My brother's business development, relationships. But we're all very strategic of kind of where do we want this business to go. And we've been that way kind of from the beginning for 34 years. But after 2007, 2009, it was a really big setback in terms of where we were going to go as a business and a family. So coming into COVID, we spent a lot of time about a year and a half before COVID strategizing, where does our family want to be with this business? And when COVID hit, we already had those plans in motion, and we did nothing but continue to execute the plan based on our experience from the last recession of doing what we learned.
Yeah, so this is a key point, and I'm going to come to you, Frank. Chip, is being prepared for when an event happens. We have lots of people that the biggest thing is they don't get started. They know that they need to get those plans in place. They know they need to deal with governance and family dynamics, but it's just too hard so they don't act. And then an event happens and they're not prepared to run through it. So Frank, anything from your practice relating to that?
Yeah, no, I think Chip's family dynamics seem to be fantastic. I think in the family businesses that I represent, you see it where it's, maybe a baby boomer founder, then you have the Gen X, Gen Y folks come along, and there's some natural tension there. And there's also just sort of natural tension, reading about Chip's story, how he did such a good job of sort of outsourcing and recognizing he needed to get talent outside of the family to come in and, help the business grow. I see a lot of family businesses that I see struggle are the ones that don't, find talent outside of the family. Because I think that's obviously one of the biggest differences between sort of the private family owned business relative to sort of a public company, that's a natural thing. So I think outsourcing talent and incentivizing them, which I know, Chip, you'll probably touch on here in a second, is, I think, a really fantastic way for a family business to have a plan and execute on that plan.
Yeah. So Chip, let's talk about that. Frank said, "Hey, you guys were all getting along. It was wonderful." Was it really that way, or are there some lessons learned there for how your siblings got aligned after the downturn?
What happened is we really got aligned around what the opportunity in the business would be. So we said, where do we want this business to be in 5 to 10 years? And then we ended up hiring a Wall Street firm to value our business based on, hey, we built this enterprise. What is it worth? What could it be worth if we grow with these assumptions? And we call that our BHAG, our big, hairy, audacious goal. And that got my siblings aligned. One, because it wasn't me, it was a third party, and they had all the comps that this is what you have. And when you're so close to it in a business, sometimes you don't know what you've already built. And maybe more importantly, you don't know where you could go with the right vision and alignment. So that was a turning point. We had a third party say, you guys have created a very valuable business. And if you execute this plan, you could reach your BHAG. And that got everyone together from my family. And then that caused us to say, we got to go hire great people, because we don't know how to do all this. So then we went off and we basically doubled the employee count over the last 24 months. And back to your early question, Bobby, right when COVID hit, we were very much in the middle of expanding, and we just kept going and kept executing our plan.
That's great. So the BHAG was a big deal. Tell me who you worked with. You had the investment banker come in, but you also had some consultants come in and support you with these evaluations of the talent you made. So how did the family get aligned that it was time to do that?
Yeah, so we hired a firm out of New York that did business valuations for family businesses, and especially in real estate sector. So they came in and kind of coached our family through what are the drivers that's going to create value in your company. And so they would attend. This is another big thing. We started having 3 times a year family meetings, business meetings, and we would do it off-site. And then we would bring in experts to help us corral us around, hey, this can happen. This is what's going on in the world. So we then took that vision based on what we thought we could create. And then we hired another company to coach our company, my siblings and myself and our team. And that was basically a coaching company. And then we ended up, it's called Petra Coach. Today we have a meeting every morning for 15 minutes. We have a weekly meeting. And those meetings are about people telling each other, are you stuck? Do you have any problems with your daily goals, your weekly goals? But it's really all wrapped around how do we grow our revenue 20%, which gets us our ultimate goal. And it's been great, but it has been a total different operating from us just thinking about what we're doing to a very deliberate, focused, okay, here's our quarterly goals, this is what we have to do. And we basically, double, triple the size of the company. But it's been hiring expert people that know what they're doing when they come in the door. We don't have time to train, and we went out and really intentionally took people out of industry into our company that bought into our vision and that could add value day one. So today, Joellen and Chris and I, my brother and sister, we have the weekly meeting, and the goal of that meeting is how can we help you as owners hit your goal? And then it's a quarterly meeting, and we're involved in the day-to-day part, but really our senior team is delivering wonderful results at a higher level than we ever could have.
That's great, Chip. So Chip, I think about this at EY, and what we like to say is family-owned companies that are successful and want to stay family-owned long-term really need 4 strategies. And I think you captured all of these. One is you need a growth strategy. The goose that lays the golden egg, if it's not growing, it's hard to keep everybody happy, right? So that's one. Number 2 is the capital strategy. So how am I going to fund that growth? Am I going to do it internally, debt? And maybe we could talk about that and get Frank's impression. Number 3 is shareholder liquidity. So if people are going to keep their capital in my company, they got to get some return on it. And then finally is generational transition. How am I going to get the family to move into the future? So let's come back to the CEO you hired, and how you got him and how you incentivized him. And then Frank, would be good for you kind of things to be aware of from a legal perspective as you're bringing these people in and giving away equity and incentives in your company. So Chip, you want to talk about how you found the CEO and how you incentivized them?
Yeah, great. So he came in as a chief operating officer, and he had been in the industry for 20 years. I knew his name was Glenn Preston. He was at a big public REIT, Health Peak. I knew Glenn for many years, and finally talked about our vision. This is where we're going. And then we made an intentional decision to share the wealth creation. So we carved out a very nice, significant piece of our equity that Glenn and the whole senior management team would participate in. And then we also let the senior management team invest in the real estate side of the business to create that alignment, to create that excitement about what we're doing. But Glenn came in, and then he brought in a couple other key people. And over the last year, we've added, like I said, kind of the best of the best at their specific job that we needed to get done to take the company from where it is today to the 5-year vision.
That's great. So Frank, this comes up in family companies a lot. Families don't want to give away equity. They say, let's keep the equity. And then so some things that you've seen in your practice, maybe in addition to what Chip did.
Yeah, it definitely runs the gamut. I mean, obviously it depends on the type of structure from the tax perspective, LLC, S Corp, C Corp, all those sorts of things. My personal preference is always the profits interest route. In terms of you set sort of a distribution threshold, and obviously that's tax deferred, and if tax rates stay the same, you pay cap gains on if and when the delta between the participation threshold and what the value of the company comes out to be. I mean that's always my preferred option, for companies, but it definitely runs the gamut depending on the goals of the family, their tax structure. So there's not one right approach, but I definitely see a lot of different alternatives out there.
Yeah, and Chip, who did you guys use, or how did you decide that was the right way to align interests with these professional managers that you were bringing into the company? And how did you and your siblings get aligned around that you weren't giving up? That's the other thing. Hey, if we give something to these people, what am I going to get? So can you talk about that?
Yeah, well, we basically realized that, to become a $1 billion market cap company, we're going to need different skill sets. People that have done it before, that have been there. And we just basically said we could run this like we're running it, or we could become a much bigger, significantly bigger business. Another thing, Bobby, that we did during this process is we did hire we hired EY to help our family with tax planning. This is not an ad for you here, but no, I mean, we did. And how do we structure our family's ownership in all these entities? We have 150 partnerships to minimize taxes, generational transfer of wealth. And then we hired Bassberry in terms of giving us, we redid a bunch of trusts we had. So we did a lot of estate planning in that process with the goal in mind. Let's do it way ahead of time. And that also helped my family get focused on, okay, long-term, we're playing long ball here. Long-term thinking. It's not about tomorrow, it's about long-term. And that really worked.
Yeah, that's awesome, Chip. And I think, Frank, you can talk about it, again, back to the paralyzed. But if we look at all these pillars, there's the growth of the business, the government, if you're thinking about it, it's a 40% partner today. It may be higher, depending on, if you see all the tax bills. But, Frank, if we talk that, what keeps people from doing what Chip did? And what are some of your key things that you'd say to them on how to move forward when they're paralyzed on that?
Yeah, it's a good question. I mean, I feel like to take some unnamed examples from it, I think, what I love about the family dynamic, to me, to take a step back, those are the most personally fulfilling deals to work on when, it's sort of the quintessential American dream. Family builds it up and makes something really successful and is able to monetize that. I think the inverse of that is family members are this is mine, this is mine relative, father to son or father to daughter. And so that's a challenge just to go from one generation to the next. Then coupled with the fact that if you bring outside people in, I think the dynamic of, and I think it's to Chip's point, I think he's very thoughtful about it, but I think I've always advised clients, like, look, you're gonna, if you give a little sweetener to people, particularly in a tax efficient way, the value that not only from an economic standpoint, but also on a sort of emotional intelligence level, I think it's really valuable to people. And so I always sort of encourage people to say, okay, look, they don't have to come in and get, half of your company. I totally get that. But, if you can incentivize people in a tax efficient way, I think two things, like I mentioned. One, economically, it is what it is. But I also feel like the family dynamics are much better because now they're invested in your business. And so I think that makes for a much better and more efficient, employee.
Yeah. And I think if I pull back, Chip, to your decision to get the valuation and do things, can you talk a little bit about reaching the $1 billion goal versus going, hey, we'll sell the company and exit? So you've become an acquirer of building a more valuable company. I'm getting a lot of questions, now from clients where they're getting offers, right? SPACs have raised $900 billion and there's a frenzy of capital that's sitting on the sideline. So people say, oh, well, I could sell my company for $1 billion. Walk us through the decision of, why you might not do that and how you got, you guys seem like you're operators and having fun, but it's also, what do I do with my capital after I sell it? I probably got to go look for great companies like you to invest it in. But if you could walk through that a little bit for us after that valuation point and why you decided to stay in and continue to grow versus saying, hey, why don't we just cash out and take our chips?
Yeah, great question. So we looked at it more about working on the business, and we have other investments that we're making that are supporting our business. We have a technology platform that my family's investing significant capital in that's given us a difference in the market. And so we kind of said, okay, we got our medical real estate platform, but we have these other assets. How can we leverage those other investments to make the platform better? But also at the end of the day, when we do a recap or when we have a liquidity event, we have other assets that our family is managing that are generating a transition. And so we've been in the medical real estate business for 15 years, but we have other investments around the medical field that have become significant. And so we see our family making other strategic investments that will help the core business, but also it's a good transition because we don't all want to just retire, but we feel like we could take advantage of a really great market value with what we built over a 20-year period. But that will just be maybe chapter one into another chapter for our family and our kids if they want to get involved. We'll see if that happens. But
yeah,
so
that's a great point. Yeah, it's a great point, Chip. Innovation and adjacency, right? So in the core business, I think, and you talked about this, how much you've invested in technology and innovation around the business. So not sticking to the core business, but looking to grow adjacent to it, and then looking at correlations is, I think, what you guys did. Frank, go ahead, Chip. Any comments on that?
No, I was just saying, no, that's great. No.
I think one thing, one of the things I love about the, particularly on the liquidity event for a family business, and it sounds like Chip's business is very similar to ones I've done. There's a lot of, I'll call it side hustles. You have the parent, the family has their core business, and then, the brother may do this and he leases assets to this company and this company does that. So there's a lot of, one of the challenges in a liquidity event from a family business, particularly if it's large and has lots of related party transactions, for lack of a better term, I think that can be an opportunity, but it also sometimes will, require a little bit of explaining, if you're doing sort of a sell-side process, like, so-and-so has a leasing company, we do this with them, and she has that. And so that can always add a layer of complexity. That's totally fine. It's just one thing to sort of think about as, when you go for your liquidity event. Oftentimes family-owned businesses are a little caught off guard by the fact, well, why do they care about all these sister businesses? And I said, well, if they're all related and they got, money changing hands, it'll come up. So just one thing to think about.
Yeah. So Chip, coming back to your siblings, and you kind of introduced them at the beginning, but give us, you guys really looked at your strengths and weaknesses and put people in spots that they're going to be successful with your siblings. And you all recognize that. So walk us through the process where you got, like, your brother does acquisitions. You said your sister runs the train. You're setting strategic vision. How did you get everybody aligned around doing what their best purpose is and what their best skill set is?
I think we're entrepreneurs. And so we've been in 4 different businesses. The last 15 years we've been in the medical real estate business. But a company it doesn't really matter the product. It's the process that we go through. We're pretty creative. We can connect the dots. We'll invest risk money and we stick with it. And we realize there's lots of speed bumps, to get through to grow a business. But it's no different when we were in the publishing business. I mean, we each have our role, but what the most important thing is we're all on the same page. There's all alignment of where do we want to take this business and what's the right thing for the business. And that's been great because I do hear a lot of families have infighting. We've never had that. I mean, we all say, hey, what's the right thing? One of our core values is do the right thing all the time. And that's what we try to tell ourselves and our team. I mean, we're here for the long run. And if we make this decision today or this investment, so it really comes back to getting aligned with your siblings about where do you want to take this business? And how are you guys going to get great people around you to do what you can't do? And
right.
That's been the key thing.
Yeah. And so Chip, we didn't talk about this when we were preparing. And so do you also have a board of advisors, or is it really your siblings and the management team that oversee the company? Or do you have outside advisors, either an advisory board or a true board of directors also advising you and helping you think forward?
Well, that's this year's goal. We have an informal board of advisors. We're now formalizing it, and we're bringing in more than just the typical, reference a big, great orthopedic doctor. We're bringing in a top attorney. We're bringing in a technologist. We're bringing in a medical specialist, not just a doctor. So yeah, Bobby, this year, that's one of those strategic investments we're making. And again, we're going to have to give them some incentive to really, really help us out. And so we believe that will be the next chapter as well.
Yeah. So in your plan, when you started thinking about this advisory board, Chip, a lot of people struggle with this. How did you get over the hump that you needed one, number one? And then number two, how did you start to think about who you needed to select?
Yeah. So thinking about the BHAG, we said, no, what skill sets do we need to continue to grow our business? So we kind of filled in the advisors with folks that would be able to help us with either introductions, relationships, helping us continue to grow. And so it's probably 70% non-real estate because we have a different vision with the next chapter of our company. But it was a matter of, going to get the best of the best, the people that have done it, that have experience, that could day one bring, give us an insight, give us an introduction, help us think through. We know there's gonna be a lot of speed bumps, help us get through the next level of speed bumps and be prepared for the next opportunity, which the last opportunity was COVID for us. And it would help us get ready for the next opportunity we can continue to step on the gas.
Great. And then Frank, I'm going to come to you in a second, but Chip, how did you design the advisory board and who did you use? Did you hire an outside firm? Was it Frank's firm that helped you kind of think through how you were going to put it together and, do the search and get the people on it?
We did use an outside firm. We did it internally, and we just got our senior team together and said, hey, who could really help us? So it was really leaning on people that we knew were very credible in our space. And who do you know that could help us with regulatory, reimbursements and, this guy. And then we would just make sure that advisor got the BHAG, got the vision, got the overall vision, but that they would have the culture that we have at Montecito, which is people, the greatest asset. You gotta be fair. You gotta treat them right. But so that was a process of interviewing 3 or 4 for a specific spot and getting someone who could think out of the box and wanted to step up and make a difference.
Great, thanks. So Frank, I'm going to come to you. Clients, advisory boards, true board of directors. How many of them just do the family? We're going to sign paperwork once a year because we have to, and give us an idea of who performs better.
Yeah, I think the latter is probably my experience. The family members get together once a year, and it's patriarch or matriarch who sort of runs the show. Um, I agree. I mean, Chip's progressive board structure, I think, is fantastic. I think diversity of thought, diversity of opinion will undoubtedly be tremendously beneficial to him. And obviously, I think that's the right way to do it in the long run. I think I'd be curious, Chip, how did you or when did you sort of come to that realization we needed not only outside management? I think a lot of people do that, but outside board advisors, I think that's much more rare. So I would love to hear sort of how y'all came about sort of thinking this might be the way to go for you guys.
Well, we found through the years, especially in medical, it's very relationship driven. And so what we said is we wanted to get the best specialists in different areas that we're acquiring and get a luminary or opinion leading doctor or business person to come in to help us get ahead of what other services could we develop. And then we got outside and said, okay, we need some legal, we need some folks to tell us how to structure this or spin this off or however we're going to do it. And we brought in a lawyer that has been helped our family for years. And then we just kind of went around the horn of in our company. Technology is a huge part of our business. Let's get a technologist. Let's get someone who's done extremely well in software, medical software. So it's really about where we were going, guys, and then how do we bring in the best of the best and get them to see our vision. And it was kind of hard at first to get them to see we're not just a real estate company. We're a technology company that's anchored in medical real estate today. And that's how it came about. And it was just a process. And it took us about a year. We were intentional about it, but then as you guys know, it's kind of like the other part about planning. You got to get out of the day-to-day. And that's where we've had our biggest wins of making those kind of shifts and sticking to it and not get tied into the daily grind.
Yeah. If I could summarize it, Chip, I think you said it earlier, working on my business instead of in my business. It's one of the great things that CEOs have to do if they're going to grow. And there's lots of leadership books on it. At EY, we think of it as, we need to provide operational confidence. So having good operational confidence in the business, a qualified professional team, a team of executives, a qualified board allows you to provide operational confidence to the family. And then the family can provide patient capital back to the business to keep in the business. But it's that flow of data and information that you talked about that we see really makes a difference. And Chip, I think we've seen a lot of folks go through what you did is, okay, we were the board. Now we're going to get an advisory board before we get a true board because we're not sure we want to give up the company. But the other thing that I think is incredible about what you did and a lesson learned is diversity. So if you look at companies, and EY's done some research on this, Harvard's done a lot of research on this, diverse organizations outperform. Right. So what we'll find is in the board setting, Chip, you probably could have gone and got a bunch of your buddies that you play golf with or whatever and say, this is going to be my board because I want them to tell me that I'm right. And we see that a lot of times in a family business. And what you did was you went out and got diverse people who could actually move the needle for you. So one of the things we do at EY is try to map that for people is, what's the diversity of your board? What are the skill sets you need? And then as I think in the future, what are the skill sets I'm going to have? So, kudos to you, Chip. You're kind of like, I think that's why we brought you on here. You're kind of best in class right now. So I'm sure the audience is getting a lot out of it.
It's not me. It's the team. It's the team.
That's great. That's great. So Chip, I asked you this when we were preparing, what was the come to Jesus moment? So if you could tell us about the come to Jesus moment, and we've talked about it. You guys got together, you got aligned. It all sounded great, but was there a moment in that process where you thought, hey, it wasn't going to get done and you guys weren't going to get aligned? And is there anything that got you over the hump in that?
I think getting out of the business and having a meeting in a resort and bringing in people to help you think differently, we did have to get out of the day-to-day. That was like a habit we had to break, right? And once we did that, and then we also brought in the wives. That was another big thing. We brought in the wives and the kids. And then you're talking about real alignment. And we started talking to kids about what we're trying to do. And it was interesting, guys. Our kids had amazing ideas, like on technology. I mean, my kids are a little bit older, but they would give us things that we're doing like 3 years ago, we're now just doing, and we should have done 3 years ago. So I think getting a more diverse part of the family to understand what we're doing, was really, really important to keep the glue and keep everybody working together.
Yeah, that's a really good point, Chip. So I see this so much. I work with people that are in their 80s and they're saying, "Hey, I'm not sure my kids are ready for the business," and they're in their 60s. I don't know if that works, but I think it's an amazing thing that you just talked about, Chip. And then Frank, I want to come to you for your opinion. EY did a bunch of research on next gens. So there's actually 3 different groups. You have 2 groups of millennials, 18 to 27 and 27 to 35, and now you have Gen Z, and they've grown up in the digital environment. So we've seen families start to do this. If you can engage the next generation, you send them to all these great schools. They have great ideas. We're so afraid about the wealth that we've accumulated. We don't let them in the room for the ideas, which I think it's incredible that you guys did that and what came out of it. It could be, a best practice. I think you could sell that to people. So Frank, come to you. What do you see in your clients in Nashville involving the next gen?
Yeah, I mean, I see it go sort of one of 2 ways. I mean, it's the 80-year-old who doesn't think their 60-year-old can run the business, and then there'll be a liquidity event. But more often than not, I see. I'm actually pleasantly surprised. It's a little bit more along the lines of what Chip's saying. I've got one particular business who the CEO I think is in his early 30s, and the dad. I mean, he is truly running the business. And the dad is in his 50s, and the dad sort of started it as sort of a one person shop, 20 years ago, and he brought the now CEO as a boy, brought him up along, and it's worked out really well. So I do find that that it generally depends on the family dynamics will determine whether or not the next generation go in, and that can be a whole host of reasons why or why not. But I tend to find the ones that are more successful. If they think the next generation's up for it, bring them along sooner rather than later. To Chip's point, you'll be surprised about, a lot of great ideas and just a different opinion from a generational standpoint can be super cool.
So Chip, for that next generation, what are the rules of the road for them to come into the business? So you brought in professional management. You guys are at the top strategically. Is there an understanding, and what is that understanding, how they could enter the business or be a part of it?
Well, what we did, they're not in our business, but they are owners and trusts. And so for the first time this last 3 years ago, we started explaining to them what these trusts are and what your ownership is. And this is why what we're doing as a family. And even though they're in different businesses, my daughter and son, their ideas were fantastic because they're owners of the business, they're connected, they know what we're doing. And so that's really, because I don't know if they ever really want to be in our core business, but there are other businesses that we own or can invest in that I think that they want to be in. But the key thing of being inclusive, of having them understand it, and especially the spouses understand what's going on, this is why we're doing this, and it was a great thing for our overall family. I think for everyone to get the big picture and say we can really make a difference if we join together and continue to do this. So. But anyway, Bobby, I don't think any of our siblings are going to take over our company, which was another reason that we had to build a big team, a great team that an acquirer would say, we don't need Chip, Chris, and Joellen. We have a great team, right?
Yeah.
So
yeah, great. Thanks for that, Chip. So Chip, all of the education that you did, who did you bring in the room to do that? Because it's hard sometimes to describe trust. I'm sure Frank's great at it, but is it a lawyer that should do it? Is it, a comedian, a teacher from a school? Who did you guys use to facilitate and teach the next gen?
That's great. We have only done it. We are planning on doing it. We hired a wealth management company to help our family, and they've been helpful with creating the trust. That Bassberry's team have helped us create different trusts and stuff. And they've been helpful talking to the kids about decisions that they have to make and how this will be structured. And we kind of have leaned more on them. And I think over the next year or so, that will be more important for them to have someone that they can really understand. So we do plan on bringing more coaching to help that transition. And so that's our current thinking.
Great. So Frank, really quick, you on terms of family education, and then we've got about 4 minutes left. So we'll start to go into, wrap up and takeaways.
Yeah, I mean, I think I mean, Chip's point is a good one in that just getting really just an outside view on, whatever ownership or trust. Trust isn't necessarily something I practice in, but however the ownership structure is involved, and if you want your kids involved in that, I think it's always a little bit better to hear it from somebody other than mom or dad, to be honest. I mean, that's just sort of, human nature. And so I've always found that, if you're bringing the next generation along, it's always helpful to have maybe not necessarily the existing generation sort of explain the ins and outs, but maybe have the COO or the CFO who's not a family member sort of explain and walk through. I think that message gets a little easier to deliver when you sort of separate, those family relationships a little bit.
Yeah. So Chip, if I can summarize what I think we've talked about today. So number one is make sure you get alignment. And there's a couple of ways to do that. One is know what your big hairy goal is, right?
Audacious goal.
Right. So number one, get aligned around, what your business is worth and what it could be. Number two, get aligned around what your talents are as a family. Number three, based on those two things, you can get aligned around who you need to reach your big, hairy, audacious goal. And then number four, go out and execute like crazy. So it sounds like those are four key takeaway here with a bunch of other things. But if I come back to you, Chip, what would be your top 3 or 4 takeaways you'd have for the audience?
I think you covered it. I think the key thing for us has been measurement of it. Set the goal. We have that daily meeting. We have a weekly meeting. We have a quarterly meeting. The quarterly meeting is always out of the building for our senior team, and it's all coming back to how do we as a family or owners support our team to make great things happen. And that's really our goal. That's what we have to do in order to maximize it. But I think you said it, Bobby, those things. And then I think the one thing that we did learn, I think you said it, the alignment, but is you got to share it. You got to share. You got to say, I can't get there unless I have these people around me that are a lot better than I am. And that's been a huge part of our success. We have amazing people at our company, and they're going to do really, really well. And I get more excited about that than anything. Seeing how we can help.
I think we didn't say that. I mean, your equity kicker for the executives is like 5%, but it's 5% of a huge number, right? So I think you guys did the math. Go ahead, Chip.
It's 20%, but anyway.
Oh wow!
It's great. It's great. It's going to be great, and love doing it. We could never have done it without them, right? So that's how we look at it, guys.
Great, Frank. Takeaways for folks.
Yeah, thanks. No, I think diversity of opinions to help a family business sort of take a step back and take in perspectives that they might not otherwise have, I think are critical for a business, particularly if you want to grow substantially. In my experience, families can't do that on their own. They need, to Chip's point, they need really great people around them, and he's done a tremendous job incentivizing them. So, diversity of thought is always a good thing.
Yeah.
Totally.
So Chip, it's been great. And I think the other thing that I'd finally leave you with is KPIs are key. And the KPIs that you need for a $100 million company are different than a $250 million company, different than a $1 billion company, right? And so I think you're thinking about it too. You guys are $1 billion today. You're probably thinking I have to morph if we're going to be a $2 billion market cap at some point. So that this constant change is great. Well, I want to thank the panelists. I'm going to come to you for any final words, and then we're gonna wrap up and go into a Q&A session. So Frank, you first. Final last statement for the audience.
I think every situation is different, right? Chip's story is fantastic, but his story is not going to be potentially, if you're listening, your story. And so, there may be takeaways from Chip that you think are perfect for you, or maybe not. So, there's no one size fits all approach. And so you definitely need to be thoughtful about what's best for you relative to the facts and circumstances you're in.
Chip, final word.
I would just say, try to get out of the day-to-day and try to say begin with the end in mind. What can we create? And I think that makes a big difference in the end result.
Yeah. And the final word I'll leave you with is move forward. Don't let paralysis or any of these things keep you from moving forward. So, and I think Chip told us a great story about that. They kept moving forward. as these things got put together. Wasn't exactly perfect, but the outcome feels pretty great. So again, Chip, I want to thank you for the time that you spent preparing for this and being with us today. And I know, you like talking to people about acquisitions and what you did. So I'm sure you'd be glad if people want to reach out to you and hear more. And
Yeah.
Frank, you're right there in Nashville. And I know we got a lot of our folks, here, and well respected there. And then obviously EY will be in the breakout too. Glad to sponsor for the first time this year. And so just want to thank everybody, and we'll see you in the breakout for Q&A.
Thank you very much. Appreciate it.
Thanks.